Hello, everybody. Welcome to my introduction to accounting. This is part 10, or recording revenues. So when do we actually record revenues? When we have performed the services or if we've delivered goods, that's when we're going to be recognizing revenues. I'm going to be keeping this to services only at this point because when we sell goods, that's a little bit different. When we take intermediate accounting, revenue becomes a little bit more complicated. There is a 5-step process, and we're not going to do that here. But for us, we're going to focus on, have we performed the service? Have we earned it? Also, what's really important too is, when do we not record revenues? If I receive a cash advance for services that I have not yet performed, I don't record revenues. In fact, I'm going to record a liability. But when it comes to recording revenues, the key thing is, have I gone through and performed the services? So let's take a look at a couple of different examples. So let's look how we go through and record revenue. So as we remember from our previous lessons, I have my balance sheet accounts over here, which is my assets are equal to my liabilities plus my owner's equity. DC, or debit credit. Assets typically have a debit balance. They are increased with debits, decreased with credits. Liabilities and owner's equity typically have a credit balance. They're going to be increased with credits, decreased with debits. Now, when it comes to recording revenues and expenses, I'm going to go expense revenue, or ER. I do not want to end up on the weekend. I do not want to end up in the ER. But over here, I'm generally going to be recording my revenues with credits. Let's take a look at each of these examples. So over here, I performed the services. So the customer owes me the money. So I performed the services for the customer on account, and I sent them an invoice. What is an invoice? If you don't know, type in, what is an invoice? An invoice generally is a summary of services. So if I've performed the services, I'm going to recognize the revenue. So over here, I'm going to credit services revenue for $100,000. And we'll label this transaction A. We've got B, C, and we've got D. So I'm going to credit services revenue for $100,000, right? Revenue credit. Now, I'm not getting cash, but does the customer owe me money? And the answer is yes. So what I'm going to do is I'm going to debit accounts receivable. What type of account is accounts receivable? That is an asset. It's giving me future economic benefit because I need to get paid by my customer. So I'm going to debit accounts receivable over here for $100,000. Okay, let's go to the next one. Right over here for my next item up for bids is on September 1st, Elon paid us $50,000 for services that I will be performing in the future. Can I record revenue? The answer is no. I cannot record revenue because I have not yet done the work. But am I going to turn down that cash? Absolutely not. So right over here, what I'm going to go ahead and do is I'm going to debit cash for transaction B because I'm receiving cash, and cash is an asset for $50,000. So I'm debiting cash for $50,000. Now, what account do I want to credit? Well, I haven't done the work yet. So what I'm going to go through and record is something called unearned revenue, which is a liability, right? So I'm going to credit unearned revenue for $50,000. This is a liability. It is not revenue because I have not yet done the work, right? So again, everything has to make sense here. I'm getting cash. Cash is an asset. I'm going to show that increase with a debit. Unearned revenue is a liability. I have an obligation. I've got to perform those services in the future. That's going to be a credit. Over here, I performed services for a customer and received an immediate cash payment for $40,000. What's happening here? Well, I'm getting cash immediately for $40,000. Okay, so I'm going to debit cash for $40,000. For every credit, for every debit, I need a credit. Well, here, if I performed the services, I'm going to go ahead and credit services revenue for that $40,000. Now let's look at the very last one over here. The customer that I sent the invoice to back on August 1st is now paying me money. Let's think about it. Okay, for this one right over here, if I'm receiving money from this customer, what am I getting? Well, I'm getting cash. Am I going to turn it down? Absolutely not. But when I come over here, do I recognize revenue? The answer is no. How much did the customer owe me from before? Well, they owed me $100,000, right? Once they paid me, they're giving me now 88 grand. Do they still owe me $100,000? The answer is no. And in fact, the amount that they now owe me is going to be the 100,000 less the 88,000, or a total over here. I take my debits, my credits, subtract the smaller from the larger balance, and now I'm owed 12,000. That's why I know that this balance makes sense. I was owed 100 grand from transaction A. They just pay me 88,000. So that's how I go through and record it. The reason why I'm showing you this is that if a customer, if I've already recognized the revenue and the customer pays me the cash that they owed me, I don't recognize revenue again. So these are some basic revenue examples. Hope you enjoyed them. I want to thank you for watching this, and please feel free to leave questions below. I appreciate your liking and subscribing, and have a great rest of your day. Have a good one.